Hey traders. Welcome back to another episode. Let me ask you something real quick. How many times have you taken a loss, and you didn't even know why it happened? It's not because you're bad at trading. It's not because you lack knowledge. It's because you don't have a setup with clear, objective rules. In trading, if you don't have a setup, you're not really trading. You're just gambling with price. Today, I'm going to break down one of the strongest smart money setups I personally use. Liquidity sweep, order block, fair value gap. This is a setup that helps you enter with clear confirmations, identify reliable reversal points, know exactly when to trade and when to stay out. Easy to understand smart money videos that you can apply right away. Make sure to hit like and subscribe so you don't miss the next strategies. Alright, let's get started. Alright guys, before we jump into the full breakdown, let me make this super simple for you. We're going to strip this trading strategy down to just 3 main pieces that literally anyone can understand. Let's go. First up, liquidity sweep. This is basically smart money shaking the tree. Picture the big boys, the whales, the institutions. They purposely push the price just far enough to trigger all the little retail traders' stop losses. Boom. They get hunted. Why do they do this? So they can scoop up all those juicy positions at way better prices before they send the market flying in the real direction they want. It's like clearing out the playground so they can play their own game without any annoying kids in the way. Savage, right? Number 2, the order block, or OB for short. This is straight up the smart money's home base. It's that specific zone where the big institutions park their massive orders. Usually, it's the last area where smart money made a significant move before shifting the market's direction. And price loves coming back to test this zone, and guess what? It bounces, or fully reverses, because that's where all the heavy buying or selling power is stacked. This is their fortress, guys. And number 3, the fair value gap, aka the FVG. The absolute sweet spot for entries. Sometimes when smart money decides to move fast, price blasts off so quick that it leaves this little empty gap on the chart. Like a 3-candle imbalance where the market literally skipped over some prices. That gap. Pure magic. It acts like a magnet and a perfect low-risk entry zone. Because the market almost always wants to come back and fill it, or use it as support/resistance. No guessing, just clean high-probability setups. Oh, and real quick, keep an eye out for the CHOCH, the change of character. That's when the market structure suddenly breaks, higher highs, higher lows flip, or lower highs, lower lows break. It's usually your very first warning that a reversal is coming in hot. So, here's how everything works together. Number 1. Smart money sweeps liquidity, grabs those stop losses and collects their positions. Number 2. They drop their big orders inside the order block, and that's what creates a super strong reversal zone. Number 3. The FVG gives you the exact spot where price wants to come back and fill, your clean entry point. And number 4. CHOCH steps in and confirms the trend is shifting. That's your high probability setup right there. So when all of this lines up, the market is basically telling you loud and clear, hey, this is where smart money is playing. No guessing. No overthinking. Just structure doing its thing. But to make this smart money setup reliable, you need multi-angle chart analysis and 2 clear steps. The higher time frame, this is where you figure out what smart money is doing. The lower time frame, this is where you nail down your exact entry down to the pip. In simple terms, higher time frame creates the setup, lower time frame creates the entry. Here's an example. 30-minute chart, spot the liquidity sweep. 15-minute chart, confirm the order block. 5-minute chart, see the fair value gap, FVG, appear. 1-minute chart, check the reversal structure chalk, then enter the trade. We have two types of entry. First is the conservative entry. Here you're looking for CH signals plus an FVG forming. The idea is to place your order when price comes back and reacts at the FVG or order block. This approach is safer, lower risk, and makes managing your stop loss much easier. Second is aggressive entry. Here you're setting limit order right at the order block, without waiting for a full chalk confirmation. The moment price taps into that zone after a liquidity sweep, you're ready to strike. This method gets you earlier entries and bigger risk reward, but it also comes with higher risk, because you're betting on the rejection happening immediately. Both entry types work. It just depends on your personality. If you like calm, confirmed setups, go conservative. If you want early entries and don't mind a bit of heat, go aggressive. Alright, now that we've covered the setup details and the two entry types, let's put everything together and see how this actually plays out on a real chart. So first, zoom into the H1 chart. Here you'll clearly see the market trending upward, higher highs, higher lows, everything is clean and bullish. And right there, price sweeps the sell-side liquidity, letting smart money stack up there by positions. Next, slide down to the 30-minute time frame. This is where you'll find the bullish order block, the zone that forms right after the liquidity sweep. Now let's zoom in even further. On the 15-minute or 10-minute chart, look for a chalk signal. That's what confirms the shift in momentum. At this point, you'll usually see an FVG and an order block sitting in this area. Price can retest either one. If you're going aggressive, you can place a buy limit at the 50% level of the FVG, with your stop loss placed below the order block. If you prefer the conservative entry, wait for price to come back, tap into the OB, show a long wick rejection, and then give you a strong confirmation candle. Your stop loss goes right under that long wick candle for the safest protection. Remember, conservative entries mean lower risk, cleaner confirmations, and way easier stop loss management. Perfect if you want a calmer, safer trade. Okay, we've covered one of the strongest smart money setups. Liquidity sweep, hunting liquidity. Order block, where smart money places large orders. Fair value gap, FVG, precise entries. This setup can be applied to both bullish and bearish setups, with either conservative or aggressive entries. This setup is not a holy grail. It takes repeated practice to get familiar with sweeps, OBs, and FVGs. Most importantly, always manage risk and be patient waiting for signals. If you found this video helpful, hit like and subscribe so you don't miss the next smart money strategies. Thanks for watching, see you in the next one.